If your books are a mess right now, stop. Don't touch anything because there is an order to fixing this, and almost everybody does it backwards. They open their booking software and they see 400 uncategorized transactions just staring at them, and they just start categorizing. 4 hours later, they're going to have to undo every bit of it. So today I'm going to go ahead and give you my exact order that I use. If we haven't met yet, my name is Nixon. I am an AFSP tax analyst here in Houston, Texas. And I help small business owners get their books clean so they can stop overpaying the IRS. And this is the tea on taxes, where I spill the tea on all things to do with your taxes. So by the end of this, you're going to go ahead and note 3 things: where to actually start, how far back you actually need to go, and this is one that nobody tells you, the point of when you should stop doing this yourself by DIYing it and hand it over to a professional. 5 steps in order. Let's go. So, step 1, before you clean anything, you need to decide just where the mess starts. You want to pick a window, and most of the time that is January 1st to up until the current date. Here's why that matters. If you don't set a finished line, you're going to go ahead and wander around in there for about 3 weeks and never actually get anything done. So you want to pick the dates and write them down. So again, January 1st to today. Then what you're going to do is you're going to gather everything. You're going to gather everything before you start, because stopping halfway to go dig for a statement is exactly how people end up quitting. So you're going to look for bank statements. You want every account, every bank statement, including your personal if you're mixing your personal. Credit card statements for every credit card that you're using for your business. Any loan statements, your Stripe, PayPal, Square, Venmo. You want payroll reports if you have any, like the stuff that you get from Uber or Lyft. Also, big thing, last year's return. This last one really matters more than you think. Your prior return has your depreciation schedule and your ending numbers on it. Those are your starting points. If you guess at it, you won't be able to carry it forward. So don't guess at it. You need to carry that forward. All right. Now you can open the software. And step 2, and this is one people skip. You want to reconcile first. Reconciling just means that you are matching what's in your books to what is on the bank statement. And you want to make sure that you have the same transactions and the same ending balance every month. And that's it. Okay, that's the whole idea of reconciliation. And I know what you're thinking. Why would I reconcile before I categorize? Isn't that backwards? No, and here is why. Categorizing is you deciding where each transaction is. Reconciling is you proving the list is actually complete and correct. And if you categorize first, you're sorting a list that might be missing 3 weeks of transactions, or has the same deposit in there twice because your bank feed disconnected and then reconnected in March. Duplicates are the number 1 mess that I find in do-it-yourself books. Okay, number 1, if you categorize before you catch them, you don't just have 1 duplicate. You have a confident duplicate. Now it looks like real income, and now you're paying taxes on money that you never even made. What you want to do is start with the oldest month first. So the oldest month first, you're going to do this for every account: your checking, your savings, your credit cards, the loan, your merchant accounts. You're going to work forward 1 month at a time. And then you're not going to move to the next month until that difference field says 0, and you will see that. And I'm not saying not close to 0. It needs to be 0. They need to equal each other. So if a month won't reconcile, 90% of the time it is one of 3 things. There is either a duplicate, transaction that was dated in the wrong month anyways, or a transfer between your own accounts that maybe got recorded twice, okay? So check those things before you go hunting or do anything fancy. Quick thing, if this is already saving you a headache, please hit subscribe. I do these every week for small business owners and who want to go ahead and stay ahead of their taxes instead of hiding them. Step 3, and this is where people usually find money. In step 3, now and only now, you can go ahead and touch that uncategorized pile, okay? Do not go from top to bottom by date, okay? That is like the slow way, and it's exactly how people burn out on transactions, because you are going to burn out by transaction 90 for sure. You're going to sort by dollar amount. First, you're going to go from highest to lowest. And because most of your dollars are sitting in a handful of transactions, you want to fix those first. And once you fix those first, you fix most of your P&L in about 20 minutes. Now, that $4 coffee charge that you got, that can wait. Then next, you're going to go ahead and batch by vendor. So if you have Home Depot showing up 11 times, you're not making 11 decisions. You're making 1. So batch your vendors. Now, 4 things that I see miscategorized constantly, and every single one of them will cost you money or credibility. Okay, 1, transfers between your own accounts. You're moving money from checking to savings is not income, and it's not an expense. It is a transfer. When it gets booked as income, your revenue gets inflated, and you're paying tax on your own money twice. So you don't want to do that. Next is personal spending. Okay, this is not a business expense, friend. It is what they call a owner's draw. It comes out of equity, not your profit and loss. So booking it as an expense is exactly the kind of thing that falls apart under a second look. 3, credit card payments. Now, paying your card is not an expense. The expense has already happened when you swipe that card. The payment you are doing to the credit card is just you moving, again, money to another account. So what you're going to do is you're going to book it against the card's balance. And there should be something that specifically says that when going to mark that in your tax software. If you're using like Xero or QuickBooks, they do have where you can show that credit card payment, and it says exactly that. So it goes towards that, and it's going against that liability, because your credit card balance is a liability on your account. And then 4, loan payments. Okay, only the interest is ever deductible. So the principal is not. And if you're categorizing the whole payment as an expense, you're actually overstating your deductions. And that one does get caught, because you can deduct the interest, and it's a separate section in the Schedule C or on the tax return. Now, anything you truly just can't identify, I don't want you to guess. You need to park that into a holding account. Now, some folks call it ask my accountant, and then they just keep moving. And what you're going to do is deal with that pile at the end when you can see them all together, because sometimes they have this pattern. Now, step 4, I want you to know that clean books and correct books are not the same thing. So I want you to do a gut check. Okay, 4 just really quick gut checks. You're gonna run your profit and loss by month, and you're gonna look at them side by side. And your eye will probably go ahead and find the problem just instantly, where one month the office supplies was like $900 and every other month it's like $40. So you wanna go ahead and look at that month where it's like $900. Next, pull up your balance sheet. If a bank account shows a negative balance and your actual account is not overdrawn, then there's something wrong. Same with your old balance sitting in undeposited funds. You want to match your income to your merchant reports. So if Stripe is saying that you got $52,000, but your book says you only got $47,000, you need to find out where that $5,000 is. And that is something I see a lot of times when I'm doing tax returns, when they're like, I only got 30,000 selling on eBay, but it's telling me that I actually got, way more money. And that's because they're either not counting the fees or whatnot. So you want to see where that extra 5,000 is. And lastly, you want to compare your starting numbers to last year's return. Okay, they should agree. If they don't, then the gap doesn't disappear. It is going to end up following you year to year to year. Okay, so that's it. 4 checks, maybe 15 minutes, and you'll catch almost everything. Step 5, and I mean this, knowing when to stop is a skill. Here is when I would go ahead and tell you to hand it off to a professional bookkeeper. 1, you are more than one tax year behind. 2, personal and your business are running through the same account. A professional is going to be able to help you clean that up properly. 3, you have payroll. Just flat out, you have payroll that you are paying employees. There are employment taxes that you need to handle. It is best to have a bookkeeper assist you with that. It's for all the compliance laws. And then 4, if you're an S Corp or partnership, it's probably best to have a bookkeeper look at that, because you're accountable to other people, and it is good to make sure that your books match and you're giving them as well the correct information. You've sat down, and then lastly, you've sat down, okay, and this last one is a real tell. If you keep opening it and closing it, that's not bookkeeping anymore. I mean, that's basically just a time and energy problem, and it's costing you way more than you think. I mean, there's no prize for doing this alone. If cleanup takes you 40 hours and you bill at $100 an hour for your normal business, that's $4,000 of your own time that you're wasting. Okay, I want you to run the math before you decide if doing it yourself is a cheap option. And do it early, because emergency cleanup 2 weeks before the tax deadline is going to be a whole lot more than cleanup in a very quiet month like July or August. I mean, these spots go fast too with bookkeepers. All right, so here is your order one more time. Set your window and gather everything, okay? You're going to reconcile. You're going to clear the uncategorized transactions. You're going to tie it out, and then, big thing, you're going to know when to call it. So in that order, okay, your books are not a mess because you're bad at this. Okay, they really honestly got messy because you were busy running your business, and that is a good, very good sign. If your books are behind and you want them handled without the panic, I do work one-on-one with small business owners in person and virtually to help get their cleanup done and keep it done. So there is a link to book a consultation in the description below. And if this helped you, please hit that like button below. It helps more people find this video. And please subscribe so you don't miss the next tea on taxes. Okay, until then, keep on sipping. Bye.